Okay, thank you everyone for attending. We might get started. Might be some further attendees that join. Look, firstly, just wanted to thank everyone for making themselves available for this session. Today, we're putting on a webinar on sustainable investing. It's a really interesting topic. It's not a new topic, I'll be frank. It's a topic that has been discussed for many years. It's had different names and people think of sustainable investing in different ways. It means different things for different people. So whilst it's not new, it certainly has grown. It's grown both in an institutional level in terms of institutional investors, but from my experience, I'm starting to see a lot more retail interest and also investment managers are talking about this topic more and more. In fact, in our last quarterly manager review, it was a topic that pretty much all managers wanted to have a conversation on around their process, etc. And that really was quite interesting. So the demand is certainly increasing. One of the challenges, though, we see in this area is what is a framework to have a conversation with a client on this topic. And that really is the purpose of today's session, to try and help you and your clients with regard to having a framework and having a template and what we have put together, which is a white paper on this topic. So to really try and capture some of the definitions, what are some of the trends, and really help you with regard to having a framework to have a conversation. The way we look at that is around having a beliefs framework and having a look at a lot of the documentation that we make available. You can reference a white paper that we've done on in investment governance, and it does talk about beliefs, empirical evidence, and actions. And that's the same process that we're looking to go through here today. So what is the beliefs around sustainable investing? Is it responsible, ethical, ESG? There's lots of different names. What do they mean? And importantly, having a framework to have that conversation is this white paper, but also the session that we're looking to put on. What we'll look to do from this session is provide the next step, and that is what are the actions that one would take to be able to implement some of these concepts. And so we'll be running another session after this one in probably a few weeks' time and make that available to you if that's of interest as well. But today we've got Isaac here who's going to take us through this session. So I'd like to welcome Isaac and invite you to take us through sustainable investing, key concepts, trends and developments. Thank you.
Great, thank you very much, Shane, and thanks everyone for joining. Just a quick couple of housekeeping matters. We have the Q&A in the chat function here. So if you have questions throughout, or if you want to chat, feel free to use that. And of course, we'll take questions at the end, and Shane will help moderate that. Today will be a relatively short webinar. I wanted to sort of take the opportunity to share some of the material from our recent sustainable investing white paper, and many of you will have seen that. It's a paper that, as Shane mentioned, we put together, we being the portfolio advisory service, we put together for a host of reasons, and I'll go through them, but it really is reflective, I guess, of a topic that we know is important. We're hearing that loud and clear from our clients, and they're hearing that from their clients. It's grown in interest over the last 12 months. It's something that's gathered a lot of attention. Here in Australia, we're seeing all of this attention. In Asia, it's been growing very rapidly over the last 12 months. But as Shane mentioned, this isn't a new topic. It's something that has been around for a decade or more, and what we're seeing now is almost a critical mass of interest, and it's really filtering through the entire financial market landscape, from the very largest investors right through to the retail investments landscape, and we think that's a great thing. We think it's a very important thing, and so we were motivated to try and unpack some of this very broad area. And not so much go through how you should do ESG today, because there's a lot in that. But we did want to share with advisors, with investors, with interested parties, just some information on the how and the why of sustainable investing, what that journey might look like, where it might go over time, and why it's so important more than anything to start that journey. So, so with that in mind, hopefully it will be useful. I'd like to start with a poll, if we can, and it'll come up on the screen any second. But what I'd like to know is, in 2021, have you as an investor, or you as a manager or an advisor, have you started to consider sustainable investing or ESG in your investment process? Or perhaps you're further along the journey and it's already fully integrated in your investment processes. Have you seen increased demand from your clients or from your investors for sustainable investing or ESG? Have you ignored it entirely? Is it something that's just not on the radar? Or is it a matter where you're maybe not fully across exactly what this movement is and what ESG is? And I think there's no shame in that. It's a very big, important area. It's a big challenge to implement this. It's difficult to get across all of the information and the nuances. And so perhaps it's something where you're still sort of scratching your head and saying, I don't really know yet. So if we can finish that poll, we'll move onto the actual seminar, and we'll revisit those results a little bit down the track, and I think it'll be interesting to see exactly where we are as a group on that. So let's start with some background. Some of you will have already received the white paper that we put together earlier this year, and maybe there's a question there about why did we do this? Why did we sit down as the portfolio advisory service and think that it would be useful to release this white paper? And first, we decided it would be useful because it was a great way to evidence our own beliefs and test our own processes and governance. We've had sustainable investing as a key investment belief of our own for many years now. And we've been working with our investment partners to improve how we can implement that in our portfolios and in our clients' portfolios. So it was a timely and important part of our governance process. It's something that we find very important. And that does take us to the second reason, and that is governance itself. So sustainable investing is, we think, an increasingly important part of investment governance. And this is really true whether you're a sovereign wealth fund, whether you're a family office, a high net worth individual, an investment fund, a mum and dad saver. This is something that's going to touch on everybody who is an asset owner. And we wanted to share some thoughts on how this was relevant for governance, which we think is a really critical part of meeting a fiduciary duty. So governance was the second point, and then third was demand. And our clients across Australia, our clients across Asia, it's really a global phenomenon. There's been an incredible amount of demand for information about sustainable investing, some education on the topic, and not immediately requests that I need to implement this, or I need a portfolio that is 100% sustainable. More an indication that there's a journey there. I want to start that. It's important to me. It's important to my clients. How do I think about this? Give me a framework. So we put this together, and we're hoping that it's not the unifying framework, but it's a framework that can be used to think about this very important topic. So that's why we sort of put it together. And now I'm going to actually ask if we can get the poll results up on the screen now that everyone's had a chance to vote, and just sort of see what's going on here. And this is an interesting set of results. We can see that roughly 50-50, people are starting to consider implementing or consider the journey of sustainable investing in ESG in their investment processes, but they're not fully there yet. And that's no surprise to us. It is a long journey. It's a challenge to implement. It's something that shouldn't be done in a knee-jerk reaction. So that small percent who are fully integrated, not too surprising, but the other, seeing increasing demand, that just resonates with us a lot. We are definitely seeing it. We think it's coming right through from top down and bottom up. Regulators are focusing on it. Investors are focusing on it. Fund managers are focusing on it. This is a big picture topic, and so not too surprising there. And I think that those results are pretty much in line with what we would have expected. And so hopefully this seminar and the white paper can go some way to helping with those. So let's move on to I guess a starting point for governance. We mentioned beliefs, we mentioned governance as reasons for doing this. And we at the Portfolio Advisory Service, we've previously written a white paper on governance. So I won't belabor the point around governance. We have a lot of material there, and we're happy to talk through it. But good investment governance starts with investment beliefs. And for us, we have had a long-term belief that long-term sustainability issues can have a material impact on risk and return. And this is an example of one of our beliefs. But our governance framework is not just a set of beliefs. We think that it should be evidenced. There should be some principles attached to that. And that sort of helps to clarify the beliefs. So you can see here that we think about sustainable investing as a range of areas, and that those range of areas are important as drivers of risk and drivers of return. So that's a way of thinking about sustainable investing within an investment process and with investment beliefs. But a good governance framework as well should have actionable implications. And here you can see some of our actionable implications from our belief structure. We favour strategies that embrace sustainable investment. We like to work with stakeholders, funds, advisors, clients to help integrate that into portfolios where appropriate, and that gives us some concrete actions that link investment beliefs to objectives, to portfolios, to outcomes. And that's for us a useful way and a usable way of thinking about governance and thinking about why sustainable investing is important. But moving on from beliefs and governance to a need and the demand that we were seeing from our investors and our clients, and how do we think we can provide important information and set out some important steps for those stakeholders, for the advisors, for clients and others to start that journey in embracing sustainable investment. And I guess the point I'd make is it is not an easy task. If you've got an investment process that doesn't integrate or embed in sustainable investing, it's not an easy thing to just jump in and build that in there. Doing so obviously will require understanding, some knowledge, a framework about how to think about sustainable investing, and it's going to be pretty challenging to fully embrace and fully embed that in an investment process without the understanding. So that was one of the needs we identified. Second, sustainable investing ought to be linked and should be linked to fiduciary duty and exercising that duty. So we have clients and we are investors that act on behalf of clients, and therefore it's really important to understand the client's values and to understand how those values might shape the investment objectives of the client. So linking beliefs and values and philosophies to objectives, and then being able to think about from a portfolio perspective, an understanding of what is and isn't allowed, what that means in terms of portfolio construction from a broader level. The third goal, we think, and the third area that we can help with is integrating sustainable investing into the investment process. And that, as I said, is easier said than done. It's about building and adhering to a robust, repeatable, credible investment process. That is important, whether you believe in sustainable investing or not. That is the heart of a great investment engine. But we've observed that is challenging of itself. Ignoring sustainable investing, that is a challenge for a lot of investors. And some very large investors find that challenging. When you add sustainability investing, when you add the broad scope of areas that are included in sustainable investing, you can see that becomes even more challenging. It's another layer of complexity on top of an already difficult task. So that integration is really important. And without it, the fourth step is virtually impossible. And that is implementing sustainable investing. So implementation is the practical output of all of this work. It's where the rubber hits the road, if you like, and it's where the benefits are felt by investors. And that is not going to happen unless you have the other three elements lined up. You need to understand what you're doing. You need to think about how that should be reflected in your values and beliefs. You need to be able to integrate that into a process, and then you can think about where the implementation is going to be used. And the risk and the temptation we observe is to rush through the first steps and just jump straight into implementation and think about throwing together a portfolio of thematic funds or ESG funds and saying that I'm done. This is good to go to clients, and that's where efforts can go unstuck. We think that there's more to it than that, and so it's important to approach this as a journey, as a pathway to something in mind, and not to take knee-jerk reactions to the noise that's coming up around sustainable investing. So with that in mind, let's turn to these parts, each of these elements in a little bit more detail. So what is sustainable investing? And it sounds like a very simple question. It's not. Sustainable investing, ESG, impact investing, ethical investing, climate change, green bonds. It is a broad list of areas that are sort of nested within this concept of sustainability and sustainable investing. It is a long list. We tend to use the term sustainable investing to ring fence all of these. We think that's useful because it's a very broad term, and then lets you think about what area is most appropriate for your clients or for yourself, what area fits most closely with your beliefs and your objectives. But it can be framed in this catch-all term, and not all of those sub areas are going to be of interest or of value to everybody. But ultimately, when we think of sustainable investing, we define it, and we tend to define it in terms of investing that ensures short-term actions do not compromise long-term outcomes. And long-term outcomes really specifically here refer to better returns and or lower risk. And so for us, we think sustainable investing, if that's a usable definition, should consider return, it should consider risk, and it should be framed in terms of long-term responsibility for the future. And that is something that's really critical. So from a practical sense, when you look at this slide, there's a schematic here which was put together by a group, Boffo and Battilano, and that helps set that out somewhat. So what do you see here? You can see that at one end of this spectrum, there is conventional financial investment, traditional financial investment. It considers financial returns and risk only. At the other end, you have philanthropy, and really that's focused on social returns only. So two very different focuses, but then there's a a spectrum there between those two that incorporates a range of different styles and considers return and risk and long-term responsibility to different extents and in different ways. And understanding that spectrum is it's a good starting point, we think, for exercising a fiduciary duty on behalf of the client. But understanding that is easier said than done, as we said. There's not a unifying framework for all of this. You'll read 10 different papers and come across 10 or more different frameworks. So we think that at this point, at the start of the journey, and then along the journey, it's useful to have some understanding that this is a spectrum of outcomes and areas, and that each of them should be considered carefully when you're building portfolios or thinking about investing. Now, as I mentioned, we've released a governance white paper that's available on request, and it really aimed to set out what we call best practice stewardship for investors taking on a fiduciary responsibility. And we think that sustainable investing fits in with governance like a hand in the glove, really. It is very, very closely related. And it's becoming increasingly clear to investors and people and corporations that it is a critically important part of a fiduciary duty. So this quote here from KPMG reporting that in 2019, global CEOs were increasingly of the belief that they were responsible for ensuring that their policies reflected their stakeholders' sustainability values. And that's a trend that we think will continue and almost certainly has increased in sort of pace over the last couple of years. But what does that mean for advisors, for fiduciaries, and how should we think about that? Well, for us, we think it means being aware of your client's beliefs and values and understanding those and building portfolios that adequately and very clearly and evidence-based reflect those beliefs and values, and that will meet a portfolio investment objective. So that's a really important stepping stone. But stepping back from that, we've found that it's not always the case that advisors or fiduciaries are actually clear about their own beliefs and their own investment philosophy, particularly when it comes to areas of sustainability or ESG. And that means that there's not really any chance that they can be clear whether or not their portfolios reflect their own beliefs or will reflect the beliefs of their clients. And that sort of disconnect is really a challenge. It's a challenge even if you don't include sustainable investing, but when you add that extra complexity in there, it's going to be really difficult to show that you're fully across the fiduciary duty and areas of best interest. And so we've observed that there is a need to show due consideration to sustainability issues, to reflect on them and to monitor them. And around the world, we're seeing that's becoming a regulated requirement in various jurisdictions. And we think that that's only a matter of time, really, before we see that take place in Australia. It's really already a key area of focus for most large institutional asset owners and governments and the largest pension funds globally. They need to consider this as part of their fiduciary duty. We think it's going to be one of the key issues for advisors and for the industry and the profession in Australia over the next 5 to 10 years. And there's just going to be no hiding from that, we think. So when we think about, why should I implement sustainable investing? This is an important question because there are a whole host of reasons for implementing sustainable investing. There are a whole number of ways to implement sustainable investing, but when it comes down to it, doing so is really a matter of beliefs. It could be it will be dependent on the beliefs of the investor, dependent on the beliefs of the advisor, but somewhere there will be a belief that this is an important area to consider. It could also be reflective of non-financial investment objectives that could be linked to the environment, for example, or to society, or to areas of governance. There could be cultural or personal or other reasons for implementing sustainable investing. And it could be for branding reasons. Maybe there's regulatory pressure or board pressure or activist investor pressure. And this graphic here, which comes from a BNP Paribas survey, shows that all of those are important to managed fund managers in the US, and all of them have been considered as really key reasons for starting that journey and thinking carefully about implementing sustainable investing. For us, we think the two that are most consistent with our view about sustainable investing is the risk and return objectives. And at the start of the webinar, we mentioned this. We said that sustainable investing makes sense from a risk and a return perspective over the long term. It's basically links up to our definition of sustainable investing. And so from that perspective, if we think that sustainable investing can make a positive contribution to return, or can make a positive contribution to risk outcomes, then it ought to be considered as part of a fiduciary duty. And that, in effect, is where the rubber hits the road for sustainable investing. Now, that's all well and good, but is there any evidence that it actually does contribute to risk and return? Well, if there is evidence, then that it does, and if at the same time it meets client objectives or client beliefs and client values, then we think that there's a duty to consider it. And there is evidence that sustainable investing is a potential source of alpha, a potential source of reduced risk, a potential source of improved portfolio outcomes. And the evidence suggests that alpha, that return benefit could be considerable over the long run. And the various estimates are wide, from 2.3% to 4.4% per annum over the long term. These are big numbers. They are probably higher now than what they will be in 5 years or 10 years, because they're going to shrink, because investors will move to this, and they're going to try and access that alpha, and that's going to compress the alpha and squeeze the alpha opportunities over time. And that's not to say that there's a first mover advantage, so you've got to rush in and do this and do it now, because otherwise you miss out. We don't think that's the case, but we do think it's important to start the journey now, so that you will benefit from those better outcomes over time, over the long run, particularly if they are lined up with your client's best interest or your client's needs. Now, I'm going to finish briefly on investment processes, and this is something that we think investment processes stand at the very heart of managing money. It's such an important part of the portfolio construction process, and the fiduciary exercising of a fiduciary duty, having a really clear governance framework. It's all going to be housed within a really clear investment process. And for us, this is such a critical part of the journey, but it's arguably the hardest part of the journey. It's not something that we observe can just be thrown together or cobbled together or shoehorned into existing processes and expect it to work perfectly, expect it to deliver great outcomes without a real significant amount of work to harmonize it with existing processes, and to get it clear exactly what contribution sustainable investing will make to the decision-making processes. And so that's why we talk about sustainable investing as a journey. And it's a journey that could take some time, but it's something that we've found is it does need a lot of time and expertise in order to do it well. And we have observed and we have seen in the portfolio advisory services time, that there are so far very few investors who are doing this very well, or who have achieved an endpoint, or have got to a point that they can confidently say, yes, we are absolutely at global best practice in this area. I think it's a pathway where most investors are looking to move there, and that's really great. And that's why we say, it's challenging, but it's important. It's important in fulfilling that fiduciary duty. And on this page, what I'm sharing is an example of an investment process. It is actually a version of the PAS of our investment process. And you can see there that it is a process, it's ongoing, it's circular, it sets out or maps out exactly how we think about looking after clients, from identifying their beliefs, understanding their mission and their objectives and their values, working through the portfolio construction process, having a governance framework in place, reporting and monitoring compliance and performance relative to those objectives. It's a fully formed investment process. On the right-hand side of the table, and there is quite a bit of text there, but you'll be able to see this in the white paper and when you receive the slides. There are a whole lot of areas where we are and where we can assist clients with their investment processes and help them get as far along that journey as they can, and really work out what is required from them to be able to say that they are very much working within a clear best practice investment process. But it takes time. It is slow going. There's a lot of effort in there. We think that this is something that over the next 5 to 10 years will become increasingly important. We're going to see more and more momentum down this pathway. It's an area that we highlighted in our medium-term outlook, our 5-year capital markets outlook, or medium-term outlook, as one of the key themes to keep an eye on over the next 5 years. It is going to be incredibly important. And I think that what we're going to see over that time is developments where every investor will be expected to have thought about these areas and thought about how that fits into the investment process. And it won't be enough to just say, I'm an ethical investor, or I've got an ESG fund, or this is an impact portfolio. That I think there's going to be an expectation that every portfolio, every investor will have thought about these and considered how it fits with their investment process and why they're doing what they're doing, why they're not doing something else, how that shows best practice. And these are developments that we're seeing overseas already. We're seeing it in Europe. We're seeing it in the US. We think it's going to very quickly become part of the Australian investment landscape. And so getting ahead of the curve there is going to be a really important area to consider as fiduciaries, and something that we have started working with our clients on, something where we're very much open to providing further assistance with. And that takes me to our final slide. How can we help? I mean, aside from our white paper, which is available freely and widely to investors, to consultants, to clients, to fund managers, and hopefully some of you had a chance to read this, we can help with other areas. And I urge you to keep an eye out for our implementation paper and our implementation workshop. That's going to be put together and managed by Shane Hawke, our head of research and advisory. And I think we are very fortunate at the Portfolio Advisory Service to have someone with Shane's experience and capability. He's one of the most experienced researchers in Australia, certainly one of the best researchers in Australia and globally. And we're really well placed to be able to help with matters of implementation when it comes to implementing sustainable investing within portfolios. But throughout this talk, you've heard me speak a lot about governance. You've heard me speak a lot about the importance of fiduciary duty. I've talked about fulfilling that through a clear investment committee, through a coherent set of investment beliefs, through a repeatable and robust investment process. And these are the areas to focus on to start that journey. They're areas where with some help, we can get a lot of headway very quickly. to move along that journey as quickly as possible and help clients and help investors. And we've been doing that with some of our clients, our advisory and consulting clients. We've been helping through the advisory service where we're offering investment beliefs workshops, sustainability workshops. We're helping to put together investment committees. We're helping to review portfolios in line with beliefs and values, and that includes sustainable investing. And all of those are really important steps to pushing along this journey. We do, of course, also offer portfolio solutions, managed accounts, portfolio reviews, and model portfolio services, and that can be a useful way of starting some of this journey. And we have been working with several licensees to provide APL services and broader licensee functions that can just help with that sustainable investing journey and clear up what can be done quickly, what needs to be a journey, what that path looks like, and helping to show fiduciary and best interest within the sustainable investing remit. So I'm going to pause there. I think I've left a little bit of time for questions. I'm going to pass back over to Shane to run the Q&A, and I'll leave us here on the Q&A slide.
Thanks, Isaac. So yeah, I open to everyone to put forward any questions today. And look, if there are questions you don't want to share today, feel free to email us after the session. We'd welcome an opportunity to chat to you as well. Any questions coming through? Yep, we've got one coming through here now. Interesting one. So one, Isaac, around the emerging cryptocurrency sector with Bitcoin's ETFs commencing around the world. What's our thoughts on this topic?
Yeah, I mean, cryptos are a challenging asset class. I guess they're really a commodity, a digital commodity, if you like. And they are a commodity or an asset class that is difficult to value, and also one that does not have a great deal of transparency to them. And you know, if I'm going to try and tie this into sustainable investing as well, just because I think there's an interesting question here in terms of governance and values. So we've tended to sit aside from cryptocurrencies because we know what we do know. We know what we don't know enough about. And for us, there's probably not a long enough history and enough clarity and enough transparency around the valuations of these digital commodities for us to be able to get a lot of confidence in putting these within a portfolio. That's not to say it will never be the case. It's just that right now we have a very clear governance framework and a very clear set of processes and investment beliefs that to us say, sit aside and wait until you get the full information. From a sustainable investing point of view, there's plenty of arguments for cryptos, and that's because it opens up banking and or banking-like services and payment services to a very large unbanked cohort of society who otherwise may be unable to participate in the global economy in the way that they can with cryptos. So there is a value and a belief argument there that I think is somewhat countered by the fact that the transparency around some of these transactions and ownership and the way that they're implemented within the global financial system that raises some question marks about governance, the G of ESG. So we've got a argument S, we've got an argument G, and I think that there's going to be a lot of discussion around those two areas when it comes to crypto and relating that to sustainable investing that probably won't be resolved in the near term. I think that this is an asset class that is here to stay, but those sorts of big big issues are going to be grappled with for some time.
Thank you, Isaac. Another question just on the flows into sustainable investment products. I know in the white paper there's quite a good data there, quite a lot of good data, I should say, there that goes through that. Maybe just some comments on your thoughts on the actions that investors have taken in terms of flows.
Yeah, look, it's been phenomenal. Is really the word to use to describe it. There has been a market increase in flows into mutual funds in the US in particular, and throughout Europe from investors ranging right across the wealth scale into funds that have an ESG mandate or an ESG remit or a labeled ESG or sustainable or something along those lines. And it speaks to the demand and the interest in sustainable investing, and the point that this is likely to be the way of the future. We've got forecasts from various institutions saying that within 5 years, ESG mandated funds could be 35 or 50% of the total wealth managed in the US and globally. I'm sympathetic to that, but as I mentioned, what I think is going to what I think is likely to be a direction forward, maybe not over the next year or two, but over the next 5 and 10 years, would be a demand from investors that not that it's an ESG fund, but a demand that every fund should be sustainable, or every fund should be considering ESG. It should just be integrated. They don't, not necessarily a thematic or a fund that sort of purports to do this part of ESG or that part of ESG. So I think they will still exist and they'll still be important. But more broadly, I think we're moving towards a financial market globally where sustainability is another source of alpha, another factor to think about, and it will be absolutely expected by investors that it's built in.
Thank you, Isaac. Yeah, another good question here around, I guess, the view which is the most important of social investment for the investment industry in the next decade out of ESG. So the E, the S, or the G, which is the most important out of those?
Yeah, I mean, I think they're all really important, and what you'll sort of find is various fund managers and various investors will have different focuses and different sets of beliefs on those, and often they'll be linked up to the UN's SDGs, Sustainable Development Goals, and there'll be an attempt to sort of show that either the E or the S or the G part of their investments is working in a concrete fashion, in a measurable, quantifiable fashion towards improving one of those SDGs, and that is, I think, a pretty useful way and also a very concrete way for a lot of investors and clients to be able to see and feel and really grab onto sustainability. From our perspective, we think all of them are important, and remembering that we think ESG sort of nests within broader sustainability. So ESG for us is important because the climate change is an important social issue. Improving social outcomes is an important sustainability issue. Governance is a really critical sustainability issue. But the way we like to think about them, rather than imposing a belief that one is better than the other, is how will they work together to drive better risk-adjusted return outcomes for over the long term, and therefore improve sustainability.
Thank you, Isaac. And another question just in relation to model portfolios or investment options. There's starting to be a bit of a trend for an ESG type of model, or different versions, if you like, of sustainable investing versus a mainstream. What's your view on that? Is there an increasing demand that there is both a standard model portfolio or SMA as well as a sustainable portfolio, or do you see that at some stage they will merge?
Yeah, I think that there's no doubt that there's increasing demand for it. we're seeing it. I think I'm sure a lot of people on the line are seeing this, and this is where I think it's important to get to beliefs and important to get to objectives. So it is possible, and it's more possible now than it was perhaps 2 or 3 or 4 years ago in Australia, particularly, to build a model portfolio, if you like, of funds that include ESG in their name or some form of sustainable investing in their name. And that's certainly doable. And for some clients, that will be important, and that will meet their investment objective, and it'll likely deliver on their required risk and adjusted return outcomes. So it's possible and it's doable. I'd make the observation again, I'll make the comment again, that I think in 5 years' time, your traditional portfolio and your so-called sustainable or ESG portfolio, they're likely to merge. Because if you believe in sustainable investing, if your clients believe in sustainable investing, why are there two funds? Why are there two portfolios? And if you're working with a manager and you believe in sustainable investing, why are you investing with a fund that doesn't integrate sustainable investing into its process? So, yeah, I can see the argument for and the reason for the demand for an upfront sustainable portfolio. But I think they're going to merge. And I'd also make the point, and I know this is more in your wheelhouse, Shane, but that there are a lot of really great managers out there who don't call themselves ESG growth fund or sustainable international equities or whatever the case may be. But when you lift up the hood and when you rely on someone like Shane's expertise, what you see is a really great sustainable investment process that is absolutely integrated in their decision-making process and their philosophies and their outcomes. And then the question is, well, just because it doesn't say ESG on the label, is it nonetheless still a sustainable fund? And that's something that we think is really important part of the journey and working towards and learning and education in this portfolio construction process.
Thank you, Isaac. And I'm just conscious of time, and maybe if I just make some concluding comments. So, great presentation, Isaac. I think it's a really great way to explain this topic of sustainable investing. So, in a soundbite, I think the notion that the short-term actions are not at the detriment of the longer-term returns is a great way to simplify sustainable investing. But I quite like the trade-off between social impact and social returns and just conventional financial investing and financial returns. And sustainability sits somewhere in between. And that really is something we're going to work through in our next workshop that we'd welcome you to attend. And that is to try and unpack that and bring that to life around different investment solutions. Isaac did reference us offering our advisory services or our fully implemented services to help you with your business. And I'd really encourage everyone on the line to really go away from today and have a think about your beliefs. Have a look at the white paper if you haven't. There's some really great pages there that try and help you unpack that. And then when you do see our invite to you for the next session, please join us and we'll work through that a bit further. But we do offer beliefs workshops, governance workshops from an advisory perspective, but also can help you with fully implemented solutions. We think beliefs is the first step. Product selection and investment implementation is clearly the second step. And the third, which is incredibly important too, is communication. How do we communicate to our clients and our investors around ensuring that their needs are being satisfied with the investments that we're selecting? So we will work through each of those areas in a series of workshops, but encourage you, if you have interest, to give us a call and we'll look to provide some services for you specific to your business and needs. So we'll leave it there today. Thank you very much, everyone, for attending. Please provide us feedback and keep an eye out for our next workshop. Thank you.